Hey there traders, this is Steve Miley, the market chartist for FX Explained, in our regular weekly macro watch roundup for the week commencing the 28th of June 2021. Stocks shrug off hawkish Fed, pushing higher into late Q2. Let's take a look at those macroeconomic and geopolitical developments we've seen over the past week. Well, the Fed officials this past week have sought to calm markets and allay fears that they were about to start tightening the current very easy monetary policy stance. Remember, the week before the Fed meeting in here, the dot plot chart showed a potential more hawkish tone from the Fed than the market had anticipated. And on the market side, we'll come to take a look at that shortly, but we saw stocks retreat lower and the dollar strengthen. And we've seen like a reversal of that over the past week as Fed officials have started to try and calm markets. In fact, Jerome Powell testified at Congress on Tuesday, and he stated that they will not raise rates preemptively because we think employment is too high or because we fear the possible onset of inflation. Instead, we will wait for actual evidence of actual inflation or other imbalances. So again, Powell slightly backtracking on that tone that was set by the Fed in the meeting before and from the dot plot chart, trying to calm down the more hawkish tone that the market had interpreted. And then on Thursday, we also had the Bank of England meeting, and they did acknowledge higher inflation, but they view it as transitory, their word, not mine, and overall a less hawkish tone than markets had feared from the Bank of England. Back in the US, Joe Biden reached a bipartisan infrastructure deal after meeting with senators, which financial markets took as a positive. But the spread of the COVID-19 Delta variant in the UK and Europe is of concern. Though the previously high correlation between cases and both hospitalizations and deaths has diminished due to the successful rollout of vaccination programs. Let's take a look at the global financial market developments of the past week, the week ending the 25th of June. Well, equities pushed higher, the S&P 500 at another new all-time high, maintaining its bullish tone, and the Nasdaq has extended to a new all-time high, having just nudged up there more recently, rebounding from weakness we saw earlier this year, back in May. And European equities have managed to rebound as well, not yet pushing to new cycle and record highs. The DAX in here still below its record high from June, but nevertheless rebounding from weakness that we saw after the Fed. The dollar has hung on to strong gains that it made after the Fed meeting in the middle of June, a couple of weeks ago. Did retreat slightly lower in here, the US dollar index, but having rebounded from support, is holding on to even minor support now and has an underlying positive tone. And the euro remains negative, and here we had a topping pattern, setting back again, accelerating lower after the Fed in the middle of June. However, we did get a rebound last week, but a shallow rebound and looking weak. And the pound also remains negative in here, and we did get a rebound the beginning part of last week, but lower after the Bank of England's less hawkish, so de facto more dovish tone. And then obviously we've still got the positive aspects of the dollar in here playing out, aiming cable lower in here, so still a negative tone for the pound versus the US dollar. If we go across to the commodity markets now, the gold has hardly managed to bounce. Although we had that correction in the dollar in here, gold had the big sell-off after the strength in the US dollar after the Fed. So we had the big sell-off in gold as we saw US dollar strength come through. And although the dollar has retreated slightly, we haven't seen a decent rebound in gold, and it still looks very vulnerable. Crude oil continuing its strong rally that we've seen in here from late May through June and extending higher to multi-year highs. And copper in here is trying to bounce. A bouncing copper in here over the past week, having had significant losses May through June. Now let's take a look at the week ahead, the week commencing 28th of June. Well, as ever, we're monitoring for lockdown easings in Europe and the UK, and we're going to watch for COVID cases, hospitalizations and deaths globally, particularly UK and Europe, and the spread of the Delta variant. On the central bank side, we have no central bank activity of note to really focus on today, though we will be watching out for Fed speakers to see if they continue to try and pull back from this more hawkish tone that the market has interpreted since the Fed meeting middle of June. And on the data front, we have nothing really of note on Monday. Tuesday brings Japanese unemployment rate, EU consumer confidence, German CPI, and also US consumer confidence. On Wednesday, we get Chinese non-manufacturing PMI, UK GDP, the German unemployment rate and change, EU CPI and that US ADP employment change report ahead of the US employment report, which we get on Friday. Talk about that in a second. We get global market manufacturing PMI and US ISM manufacturing PMI both on Thursday. That's going to be the big focus of the week, alongside Friday's US employment report, and we also get German retail sales Friday too. I'm going to wish you all a great trading week. Please don't forget to hit the like button if you like what you're seeing here on YouTube, and also subscribe to our YouTube channel, and I'll be back with you with another Macro Watch next week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.